Hello and welcome to another update video about Uber. So I think we covered Uber maybe once or so before on this channel. It's time for an update. What's the updated Elliott wave count? We have arrived at a critical juncture here for Uber. We can see that in the white scenario, which is the preferred count, the market is moving in a large diagonal pattern. That's possible because the wave 1 was clearly an ABC structure. The wave 2 anyway is a corrective pullback, did hold a higher low back in 2022. Bottomed there at around $20, and now the third wave. While this is an ABC structure, you can put the A wave here as well, that doesn't matter so much, but it's an ABC structure to the upside here, which topped recently in March at around $84. Yeah, I mean, that could technically be the third wave, but it's too short, okay? It's too short really for a likely third wave, therefore I'm looking for a larger ABC, and it has to be an ABC because the wave 1 is an ABC as well. So there is some evidence that the A wave in wave 3 has topped. We're now in the B wave pullback, and then I'm looking for a C wave rally next. But first of all, hey, let's get this B wave done. That will take a while. Yeah, that will take a while. And I've got a standard support zone for the B wave pullback, which is between $27 and $48. It's at the moment just a very large zone. 4 Fibonacci levels here, round about 48. $40, $34, $27, where the market could find some support. And then once we are there, that could be like a long-term opportunity again for a C wave rally towards possibly $165, maybe even higher. Then we should still get a 4-5 pattern. Now, this wave count is currently preferred because we see some evidence that first of all, this A wave has not reached the 100% extension level at $92 of the initial rally, which would then clearly favor the C wave scenario, the yellow count. Okay, so this is the alternative as an ABC structure, because an A wave and the C wave tend to have the same length. But because this here is a bit shorter, it's for me less likely that this is all of wave C. Also, it doesn't count that well as a 5-wave move. One more high would change that, and then I would follow primarily the yellow count, which is a different story. But for now, I'm focused on the white one, also because the pullback from the March high is a 5-wave move, as you can see here. Oop, 1 second. So we have a 1, 2, 3, 4, 5. So that means it is now likely that we get a B wave bounce and then possibly a C wave drop in the coming months or maybe even years. Okay, so now we've arrived at the previous all-time high from 2021. And this is obviously just an area where we could potentially find some support. I mean, it's not clear yet if the bounce will start from here. Needs a little bit more upside momentum and price action for that. But it appears, you know, we have 5 waves down. That's why I consider that an A wave in a larger ABC structure. The B wave rally is now outstanding because it's a 5-wave move down so far at least. The B wave would typically end in this region, in this case between $72.50 and $78. We can calculate the target for that B wave better once we have the initial AB in place. We can calculate a target for the C wave. There's some structural resistance together with Fibonacci resistance around that $72 mark. And that's certainly an additional area to watch. If we zoom out a little bit, once we arrive in that resistance area, we have to watch for the first signals of wave C to the downside. Basically a first 5-wave pattern to the downside, which would indicate the start of wave C of the larger B wave. And then we can also calculate a target for that C wave to the downside, because once we have the initial AB pattern in place, we can calculate a target for wave C. If we get a convincing break above standard resistance, it might rather be the C wave in yellow. And if that's the case, then the next upside resistance is around $92. Okay, depending on how long that takes, it might go together here with that purple ascending trend line of that trend line basically of this potential price channel here that we see, which I don't think is too reliable, but it just would go together nicely with that 100% extension target, which is a very common target for a C wave. So that's precisely what I'm looking for at the moment. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.